Greg, there are a ton of indicators out there, probably a million if we add them all up. But if you had to reduce everything down to one indicator on your charts, what's it going to be, in addition to price?
I'm going with PPO.
PPO.
And the reason I like the PPO is that a lot of people don't believe in the trend in the moving, in the momentum indicator. But I find some of my biggest moves happen when I can draw a trend line on a weekly PPO at least 4 months long. And when that changes, like, it's a really nice entry.
Yeah.
You know, when I think about using an indicator, the one thing I like to see is a long-term trend line break on my momentum indicator before price sets out.
Yeah.
Or if they break out in concert together, I'm much more likely to take that trade. That is one of my favorite things. And I know I've been questioned on Twitter, like, who puts a trend line on an indicator? And I'm like, every day. Don't miss that.
Yeah.
You're changing the trend in momentum. That's a pretty big thing.
Right.
So how about you?
If I had to pick one, it's kind of cheating a little bit because we said in addition to price, but I would say price relative. I mean, it's all about relative strength for me. Ultimately, if I'm going to get into something, I want that thing to be outperforming the market, because as we always like to say, if you're going to outperform the market, you need to own stuff that's outperforming the market. So if something is flying higher, but it's underperforming the market, then that's not actually really strong. So I want to know that something is strong. So for me, it's price relative strength. I like to use VTI as my benchmark. That's the Vanguard Total Index.
Yeah, rather than S&P.
Yeah, for me it's just, it's a little bit broader, and I can use it. I always feel bad if I'm using SPY or something like that, if I'm using the S&P 500, but I'm looking at a small cap stock. It's never really made sense to me. So using VTI, which still trades a lot like the S&P 500 because it's still cap weighted.
Right.
I still like that it's kind of more comparable to more things across
More
the cap
names,
twos. Yeah,
So
a little broader. So.
on my charts, I like to have price relative.
Yeah.
I actually call it SPRS, S&P relative strength.
There you go.
So I tried
like
to make an acronym for it so that it was a little easier to
Yeah.
talk about. So the SPRS on my chart are breaking out, so that's positive. I like that trend line to break a lot, especially in concert with my PPO breakout.
Yeah.
The other way I like to look is the SCTR ranking.
Yeah.
And the reason that that's become so important for me over time is when I go back and I look and I see either a stock getting up into that top quartile, above 75% on the SCTR, that's a really strong confirmation. And when you start to see it across an industry group, it lets you hold the stocks a little bit longer.
Yep.
And conversely, when they break down, that's a difficult period to typically be involved with the stock. They're starting to underperform their peers. Why hang on? So,
why stay in it?
It's a relative strength indicator. It just puts kind of a percentage on it, which I like.
That's true.
Yeah.
That's true. I like that too. I mean, I use the scooter on my charts as well. So, bringing in that relative strength measure, I think, is important.
And the one thing that the SCTR does that we don't see on any other indicator is it literally tells you how it's doing compared to its peers.
Yeah.
Nothing else tells you. Relative strength doesn't tell you anything else because the scale can always change on the, comparing it to the NASDAQ or whatever.
Exactly.
So the line might be trending higher, but it could be just marginally trending higher, and the chart will take and just rescale it so it fits. Or it can just change the scale if it's like a Tesla blowing out to the upside. It'll change the scale and not make it look any different.
Yeah.
So I really like the scooter ranking for kind of making it obvious that it's outperforming its friends.
Yeah. You know what I like the scooter ranking for is as a filter, basically, especially when you get back, let's say, scan results or something like that.
Yeah.
You can use that as a filter because there's so many stocks out there. There's so many that you're going to get back. If I see something that's a 35 on the scooter rank, and there's something else that's an 80, I know that I can just kind of filter out that 35. I don't even really have to look at it. So I find that it's just an amazing filter for scan sweeps, that kind of thing, for finding stocks and funds.
On the scooter ranking itself, I've actually developed two different approaches to it.
Okay.
One is when they're terrible. And when I mean terrible, they're down at 10 or 5 or whatever.
Yep.
And they start to move back above 30 or 25.
Okay.
And the reason I like them, they were terrible, and now all of a sudden they're at least starting to improve. And many times you'll see it might be a false breakout, might just kind of run up and then run back down
Sure.
again and whatever. But some of my best trades are when you start to see a whole group set up
Yeah.
and start to turn higher. And when that happens, that's really good. The other thing I like is when they move above 75, I like it.
Yeah.
But I don't really like owning stuff that has just been sitting between 30 and 70.
Yeah.
So if I
find
look
the
at
same.
a bank stock,
Yeah.
like the Canadian banks typically track the S&P 500 to the point of boredom, like you
Yeah.
might as well own the index. And so the Scooter ranking helps show me something terrible that's either getting better or something that was average getting better.
Yeah.
And those two tools, the only thing I've found to help show me that is the Scooter ranking.
Yeah. So your line on the Scooter is 75. That's the one you like to use.
That's the one I like to use.
Yeah.
Yeah.
Yeah. I think I'm sometimes a little higher. I sometimes put it more like 80, 85. But I mean, 75, I love that it makes sense, that top 25%.
Quartiles, right?
Yeah,
Bottom
top quartile.
quartile, top quartile. Those are the only two I'm interested in. And
Yeah.
if I don't get it,
Yeah.
don't call me.
The
Yeah.
mid 50%, just steer
Let
clear.
somebody else own because
Yeah.
they're not doing anything. They're just run-of-the-mill stuff that's following the index.
Makes
So
sense to me.
we have, over the years, we've all developed our different systems. I'm sure you've gone up and down the time scale from
Yeah.
weekly, daily, 60-minute.
Yeah. All
I
of
think
them.
we all have.
Yeah.
How do you decide when you're going to use a daily chart to sell or a weekly chart to sell? What's your trigger for that?
I'm pretty much always selling based on the daily.
Okay.
You know, I bring in a lot more of the weekly perspective on the buy side when it comes to buying something. I'm scanning through all those, multi-time frame analysis. But ultimately, I'm selling on the dailies, and a big part of that is that if something starts to roll over, if something starts to fail, if it starts to underperform, I know there's another opportunity out there. I just want to get out. I want to move on to something else that's setting up. And I find that if I'm bringing in too much of a long-term perspective, zooming out too far to the weeklies, sometimes you just let those moves go a little bit too far, and you realize, looking at the daily, you should have sold a little bit sooner. So I just find I maybe move a little too quick on the sell side sometimes, leave some profit on the table there, but it kind of works for me, and it's all predicated again on that idea that there's always another opportunity out there. There's always something working. There's always something setting up. So I can move out of a trade and go find it. So what about you?
I'm trying to use the weekly time frame a lot.
Yeah.
I will say that I'll use the daily PPO.
Okay.
And if I can draw a trend line across the daily PPOs, let's say at 3 or 4 months where they've kind of made ripples at the bottom, and I can draw a trend line and that's starting to change, I'm
Yeah.
like, okay, I made some money here, I'm out, and I'll pull the string.
Yeah.
That one, but my big picture is typically I want the weekly to either have been, extended out, or
Yeah.
or I'm just getting into a trade and all of a sudden things aren't going right.
Yeah.
That'll just tell me that the weekly isn't ready to go yet and I gotta go. So
Yeah.
the weekly is my big picture, but literally if I start to see some trend lines on the daily fail,
Yeah.
and I'm a very quick one for momentum trend. When it's ending, I'm out. I don't
Yeah.
wait for the price to roll over.
Yeah.
So
So it's kind of a blend there.
yeah.
Yeah. It's a great ability that we have as chartists, as technicians, to go between those time frames, go between those perspectives. I think that's probably one of the most valuable things you can learn to do is transition between those time frames. So, even if I'm selling primarily on the daily, I'm still looking at the weekly. I'm still keeping it in
Yeah.
mind. I know you are too. I mean, you're seeing all those perspectives in one.
One of the big pictures on the commodities right now is they've been running for a year.
Yeah.
So it's like, do you start taking money off the table? Is this move just beginning? What is
Right.
it? And so when it keeps turning, if it starts to roll over, I'm taking money off the table. I'll re-enter if the trade sets up again.
Yeah.
But I'm not waiting to kind of see the high in the rearview mirror. I want to be continuously harvesting profits out of that trade. Commodities are a fickle thing. When they turn down, they don't really give you here you got a couple of weeks to exit
Yeah,
moment.
yeah.
That isn't how it works. It's typically a buy.
Yep. A
And,
little sharp.
and they move pretty aggressively. So it's one of my favorites to analyze. It's not going to allow me to stay in a trade for a year and a half typically. I did that with some of the oil stocks, but I've been pruning some of those trades back. Actually, I'm down to one that I've held for a year and a half.
Okay.
But I'd rather just go in, take another 25% and exit the trade rather than waiting for the big trend to break.
Yeah.
Because we're extended,
Yeah.
I think.
It's an important ability to know when to get out and to be comfortable moving on.
Yeah.